Welcome back to the deep dive. If you've been anywhere near the crypto space the last couple of years, you've probably heard the phrase Web3 gaming.
Oh, yeah. Usually followed by a sigh, right?
Exactly. Or maybe a groan. I mean, after the big bear market crash, the general feeling, the consensus really, was that the whole sector was just dead, flatlined.
Yeah, it became almost synonymous with, like, those unsustainable token models and, let's be honest, pretty average games sometimes.
But the sources we've dug into for you today paint a completely different picture.
Yeah.
It seems like it's not just alive, it might actually be gearing up for something. Look, pretty explosive.
It's definitely showing strong signs of life, yeah. A
A
resurgence.
massive strategic resurgence, it looks like. And interestingly, it's not being led by those, fly-by-night projects we saw last time. It's being spearheaded by a major infrastructure player, Immutable.
Right, Immutable. They're key in this space.
But a breaking news, the thing we really need to unpack today, is that Immutable is reportedly in late-stage talks with multiple confirmed major gaming companies.
And when we say major, we mean the big household names, the established giants.
That's what the sources are strongly suggesting, the names we all know. And they're talking about launching brand new tokens, potentially completely restructuring the infrastructure for their next generation of games.
Wow. Okay, so that's significant. That's not just dipping a toe in the water.
Not at all. This isn't just about selling a few digital collectibles anymore. The implication here is that this is about building the actual foundation for how gaming revenue might work for the next decade. Okay, let's unpack this.
Let's do it.
Our mission today is to really dissect this source material. We want to figure out why these massive traditional gaming companies are suddenly getting serious now, after all the previous skepticism.
And understand that shift, right? That move away from the play-to-earn hype that kind of crashed and burned.
Exactly. Towards something that the sources are framing as much more sustainable, more utility-focused.
Yeah, what's really fascinating, I think, is just the scale and the timing of this. It feels different from the noise we heard back in, say, 2021. Well, it suggests that the top brass at these traditional gaming studios, they've done their homework, they've watched, they've learned, they've gotten past that initial crypto is just scams phase. And now they seem to be prepping for real long-term integration of blockchain mechanics. When the sources say multiple major gaming companies, it really implies they're looking at sustainable, deep integration.
Not just a marketing gimmick.
Exactly. They're actively trying to avoid that short-term speculative frenzy that really defined and ultimately damaged the market last time around. This feels more strategic, more foundational.
Okay, so let's zero in on Immutable itself. They're right at the center of this. For anyone maybe less familiar, who are they exactly in this ecosystem?
Great. So Immutable is definitely a name to know. They're a recognized leader. They built Immutable X, which is a layer 2 scaling solution specifically designed for NFTs, think fast, cheap minting and trading.
Built on Ethereum, right?
Built on Ethereum, leveraging its security. And more recently, they've launched the Immutable ZK-EVM, which is even more powerful for complex game logic.
Okay, and the news is they're actively talking to these big studios about launching new tokens. That seems like the critical detail.
It is, because it confirms the studios aren't just looking for someone to, host their NFT marketplace. They're not just outsourcing one piece.
They need a partner for the whole economic design.
Precisely. They're looking for a partner to help them architect and build entire tokenized economies from the ground up. Economies designed to be scalable, compliant, and, crucially, integrated into the actual gameplay.
And the sources suggest this momentum is driven by a few key things.
Yeah, it seems to be a combination. Strategic partnerships they've already landed, which builds confidence. Proven developer adoption, meaning game creators are actually using their tools successfully.
Okay.
And probably most importantly, this foundational philosophical shift. The sources keep emphasizing real gameplay-focused blockchain experiences.
Right, that phrase keeps coming up. What does that mean in practice?
It means the game has to be fun first. It's not crypto first, game second anymore. That model clearly failed. It's game first, enhanced by crypto. The blockchain elements need to add something meaningful to a game people actually want to play.
That distinction really feels like the core of why this could be a game changer, doesn't it? Not just another bubble.
I think so. Yeah, the significance isn't just about, the potential market cap of EA or Activision getting involved, huge as that is. It's what it tells us about their long-term thinking.
Because these companies move slowly. carefully.
Incredibly slowly. Their reputation, their billion-dollar IPs, those are their crown jewels. They don't risk them lightly.
So if they're engaging Immutable to design complex tokens,
It means they're fundamentally ready to integrate blockchain mechanics deeply. We're talking beyond just selling skins as NFTs. Think about truly integrated in-game economies where players can earn, trade, maybe even craft items that have verifiable ownership outside the game server. Think about decentralized digital marketplaces that could potentially lower costs for the developers, maybe bypass the 30% platform fees, and increase player engagement because their items have real-world value persistence.
it's like restructuring the whole digital goods pipeline, potentially.
Potentially, yes. It's a fundamental shift in how digital value is created and exchanged within games.
And you contrast that with the last cycle,
Yeah,
it felt very different. More like forced experiments.
totally. Like, here's a mediocre game, and oh, by the way, we bolted on a token, go speculate. It was driven purely by that gold rush mentality.
Right.
This feels much more calculated. It signals a move towards longevity. These studios seem to be recognizing that Web3 mechanics, when done right, can actually solve some of their existing problems.
Like what kind of problems?
Well, think about the gray market for in-game items. Huge, unregulated, often scam-ridden. Blockchain offers a transparent, secure alternative. Or think about reducing transaction fees for players trading items amongst themselves. Or enabling true interoperability. Imagine taking an item from one game into another by the same publisher. That's the dream, right?
Still a long way off, maybe,
But the infrastructure being built now, like with Immutable's ZK EVM, makes it technically feasible in a way it wasn't before. They're seeing blockchain not as a fad, but as potentially necessary tech for the future, like online multiplayer was or microtransactions became.
Okay, so let's bring it back to the listener. Why should you, listening to this, care about these behind-the-scenes infrastructure talks?
Because Immutable is positioned in these sources as that critical bridge, that infrastructure layer connecting the old world and the new.
How so?
Well, imagine one of these major studios, say, hypothetically, EA, launches a massively popular game, a new FIFA mode, or something in Apex Legends that uses Immutable's tech for its item economy. Suddenly, millions, maybe tens of millions of mainstream gamers are interacting with Web3. They'll be getting wallets, maybe earning or trading tokens, using marketplaces, simply by playing a game they already love.
And maybe without even realizing they're using crypto.
Ideally, yes.
Yeah.
Without needing to understand gas fees or seed phrases or any of that complexity. The tech becomes invisible, just part of the experience. That's a holy grail. That's genuine mass adoption funneled through entertainment. It's potentially one of the biggest onboarding ramps Web3 could possibly have.
That idea of onboarding through entertainment, using this infrastructure, leads us right into this core ideological shift that seems to be driving everything. We really need to spend some time on the failure of the last model, play to earn, P2E.
We absolutely do. Because understanding why P2E failed is key to understanding why play and own might succeed. P2E fundamentally put the earn before the play.
Right, the game became a job.
Exactly. The whole economic structure often forced players to prioritize grinding for tokens they could sell just to make it worthwhile, or even just to recoup their initial investment. It wasn't about fun, it was about ROI.
Which led to those hyperinflationary death spirals we saw.
Completely. Because the rewards kept getting minted, but there wasn't enough real demand or utility to soak them up. It was often exploitative and, from a game design perspective, just not sustainable.
So now the sources are pushing this successor concept, play and own, P&O. Is this just rebranding, or is it fundamentally different?
The sources argue it's fundamentally different. It's presented as a genuine philosophical and design change. It moves away from mandatory financial gameplay towards optional, utility-driven digital property rights.
Okay, break that down. What does play and own mean practically? How does it work differently?
Okay, so the absolute crucial difference in a good P&O model is that the game has to be fun and engaging on its own, completely separate from any token price or earning potential. You play because you enjoy the game.
The play comes first.
The play absolutely comes first. Then the own component comes in as an enhancement layer. Players gain verifiable, on-chain ownership of certain assets they acquire, maybe rare cosmetics, plots of virtual land, powerful, unique items, crafting recipes, whatever makes sense for the game.
Things they earn through skill or effort, presumably?
Ideally, yes.
Yeah.
Or perhaps purchase.
Yep.
But the key is they truly own it, recorded on the blockchain, not just in the company's database. But here's the critical part for sustainability. The lesson learned from P2E.
The tokenomics.
Yes, P&O models must have robust economic sinks, mechanisms designed to constantly remove assets or tokens from circulation.
Like what? Give me an example.
Okay, maybe upgrading a powerful sword requires you to burn or destroy several other swords in some amount of the game's token. Or maybe owning virtual land requires you to pay a small token tax that gets burned, removing it from supply. Or staking tokens for governance rights, locking them up.
So it's not just constant inflation of rewards. There's deflationary pressure built in.
Exactly. These sinks create ongoing utility and demand for the assets and tokens, balancing out the rewards. This allows for potentially sustainable revenue streams for both the developers and the players who participate in the economy without the whole thing collapsing. It avoids that P2E hyperinflation loop.
Okay, that makes sense. So if we connect that redesigned economy back to the bigger picture, these major studios potentially adopting it, the impact could be huge.
Massive, not just for gaming, but for the whole crypto ecosystem. This is where P&O could genuinely drive that elusive mainstream utility for crypto beyond trading.
Right. The classic criticism, what can you do with crypto besides buy, sell, or lend it?
Precisely. If you are using a tokenized item you earned in your favorite AAA game, or casting a vote on the game's future direction using governance tokens you hold, the utility is baked right into your entertainment. It's inherent, it's necessary for that enhanced experience.
So crypto becomes integral to playing, not just an investment on the side.
Yes, it solves the utility problem through engagement, through fun. And think about that onboarding funnel again. If, say, the next big iteration of Call of Duty's Warzone or Grand Theft Auto Online integrated really well-designed P&O mechanics using something like Immutable.
Millions of players overnight.
Millions suddenly having a practical, non-speculative reason to interact with crypto assets. They might not even think of it as investing. It's just part of their game. That's organic adoption on a scale crypto has only dreamed of.
Okay, but we have to talk about the investment side too. The sources are pretty clear that Immutable's own token, IMX, is kind of positioned as a bet on this whole trend taking off.
Yes, it's presented as a key investment proxy for the sector's growth. The logic is straightforward.
How does it feed back into IMX?
Well, primarily through network activity. If Immutable X is facilitating billions in NFT trades for these games, or the Immutable ZK EVM is processing millions of in-game actions that require computation.
That activity requires fees, presumably paid or somehow involving IMX.
Exactly. Whether it's direct fee payment, staking requirements for developers, or other mechanisms built into their tokenomics, increased usage of Immutable's infrastructure is designed to translate into increased demand and utility for the IMX token itself.
And developers adopting the platform might need to stake IMX too.
That's often part of the model, yeah. Staking for security, for governance participation, maybe for access to certain services. That staking locks up supply. So IMX becomes a direct way to gain exposure to the overall health and scale of the Web3 gaming revival if it's built on their rails.
Looking ahead then, the forecast seems pretty bullish, but with caveats.
It's definitely ambitious.
Yeah.
The sources suggest GameFi could reemerge as a really hot sector for 2025-2026. But, and this is a big but, it's entirely conditional.
On the tech working flawlessly.
Pretty much. It depends heavily on Immutable and others continuing to nail the infrastructure. We're talking layer 2s that can genuinely handle millions of concurrent player actions without slowing down or costing a fortune.
And getting rid of gas fees for the user, that's huge.
Absolutely critical. Widespread gasless transactions are a must. Nobody wants to pay a network fee every time they equip an item. That friction has to disappear for mainstream users.
And wallets need to be easier.
Oh yeah. Seamless, user-friendly wallet integration, probably embedded right into the game launcher or the game itself. Non-custodial, secure, but invisible. Not the clunky MetaMask pop-ups we're used to. If they can solve those three things, scalability, gasless UX, and easy wallets, then yeah, the bullish forecast for 2025-26 seems much more plausible.
Okay, so solving those friction points really brings us to why Immutable seems to be the one attracting these big players. Why them over, dozens of other blockchains or layer 2s out there?
It really comes down to their specific focus and their technological edge. They seem to have built their stacks specifically to solve the problems that killed the last cycle.
So starting with the foundation layer 2 on Ethereum, why is that important?
Well, building on Ethereum gives them that base layer of security and decentralization that a massive gaming company protecting a multi-billion-dollar IP absolutely requires. That's table stakes. But Ethereum mainnet is too slow and expensive for gaming.
Right.
So layer 2 is essential. Immutable X and their ZK EVM provide the necessary speed and cost efficiency. We're talking potentially thousands of transactions per second for fractions of a cent.
And the sources highlighted specific advantages, gas-free NFTs.
Yes, gas-free NFT minting and trading on Immutable X was a huge innovation. It made microtransactions feasible and lowered the barrier for players to just try things out. And their commitment to being carbon neutral also helps address a major criticism leveled against NFTs and blockchain tech, especially from gamers.
Tackling those ethical and financial sticking points head-on.
Exactly. They anticipated the pushback. But the real star, technologically, seems to be the immutable ZK EVM.
Okay, tell me more about that. You mentioned it uses ZK technology.
Right, launched in partnership with Polygon, another leader in scaling. The ZK EVM is key because first, it's EVM compatible.
Meaning, Ethereum developers can use tools they already know, like Solidity.
Precisely. It drastically lowers the learning curve for traditional game developers who might already have some blockchain experience or can easily hire for it. Big advantage.
And the ZK part, zero-knowledge proofs.
Yes. This is where it gets technically superior for gaming compared to older L2s like optimistic rollups. In gaming, especially fast-paced or competitive games, transaction speed and finality are everything.
You can't have lag or uncertainty about whether your action registered.
Exactly. ZK proofs allow batches of transactions to be processed off-chain, and then a cryptographic proof is generated and posted to Ethereum, verifying their validity without revealing all the underlying data. This verification happens incredibly fast, offering near-instant finality,
Compared to optimistic rollups.
which assume transactions are valid unless challenged, requiring a waiting period, sometimes days, before a transaction is truly considered final. That delay is often unacceptable for game state updates. ZK offers much faster security and certainty.
So it's built for the speed and volume that gaming demands.
Yes, preventing fraud, ensuring responsiveness. It's infrastructure tailor-made for high transaction environments, which is exactly what complex game worlds need.
So it's like the best of both worlds. Ethereum security, developer familiarity, and then this ZK speed layer on top.
That's the pitch, yeah. And crucially, as you said, they aren't just selling a concept, they're pointing to real-world use cases and partnerships.
Right, they need to prove the model works. What are some examples?
Well, they're positioning themselves as the trusted backbone. Look at their deal with GameStop for their NFT marketplace. Now, GameStop's strategy has shifted, but that partnership showed that Immutable could handle a major retail integration.
Okay.
They also did a pilot program with TikTok for digital collectibles. Again, TikTok means massive volume mainstream users. Handling that demonstrates their tech is robust, secure, and can scale for enterprise needs. These aren't small crypto projects, they're huge organizations.
Okay, those are big platform names. But here's where it gets really interesting for me, and probably for our listeners who are gamers. Does it actually lead to good games? Because if the games built on this tech are still boring.
That's the million-dollar question, isn't it? The tech can be brilliant, but if the games aren't fun, the whole P&O model falls apart. The play has to work.
So are there examples of quality games on Immutable now?
The sources point to several flagship titles already live or in development that are trying to prove exactly that. Titles like Illuvium.
Heard of that one. Looks very ambitious graphically.
Extremely ambitious. It's pushing the envelope on what a Web3 game can look like and how complex its decentralized asset management can be. It's like a AAA level RPG auto battler hybrid with land ownership, crafting, very deep.
Okay, what else?
Gods Unchained, that's a collectible card game, kind of like Hearthstone, but fully tokenized. It's been around a while, has a dedicated player base, and has navigated the transition to a P&O economy fairly successfully. It shows the model can work for competitive genres. And then there's Guild of Guardians. This one is important because it's a mobile RPG aiming for genuine mass market appeal, but with true ownership mechanics integrated from the start. Mobile is obviously huge for onboarding.
So these aren't just tech demos. They're real games people are playing.
Exactly. Their success, or relative success so far, serves as a live demonstration. It shows that P&O can support high production values, sophisticated gameplay, generate real revenue, and build a community. Immutable isn't just selling infrastructure, they're showcasing functioning digital economies built on it.
And that's the proof that a major studio like, say, Ubisoft or Square Enix would need before committing their own massive IPs and development budgets.
Absolutely. Seeing is believing, especially after the P2E fallout. They need to see working models before they take the plunge.
Okay, let's zoom out a bit now to the wider market. Because this immutable news isn't happening in a vacuum, right? The timing seems significant.
Very significant. The data suggests that belief, and maybe more importantly, capital, is already flowing back into the GameFi sector. We're seeing a definite rebound in investment and interest.
And we're not talking small amounts here.
No. The sources we looked at, referencing data from places like Daprodar, indicate that over $2 billion in gaming-related investments have entered the space in 2024 alone.
Wow, $2 billion. And that's mostly VC money.
Primarily venture capital, yeah. Focused on funding the infrastructure like Layer 2s, wallet solutions, analytics, and directly funding the game development studios themselves.
That level of investment feels different from the retail FOMO of 2021.
It does. It suggests a more serious long-term belief from professional investors in the viability of GameFi.
Yeah.
It feels like patient, strategic capital building the foundations, not just chasing quick flips.
And it's not just VCs. We're seeing established traditional gaming companies sticking around or even doubling down.
Yes, that's another key signal. The sources specifically mention companies like Ubisoft, which has had its own blockchain initiatives for a while.
They launched their Quartz platform, right?
Yeah.
Got some initial pushback.
They did, but they seem persistent. And Square Enix, the Final Fantasy publisher, is another big one. Sega, too. They've all publicly stated they're continuing to explore or implement blockchain integrations.
So they haven't been scared off permanently by the bear market or the initial negativity?
It seems not. It suggests they see Web3 integration less as a temporary trend and more as a potential long-term evolution of digital ownership, monetization, and maybe even community engagement. They can't afford to ignore it completely.
There's also this interesting convergence happening, mentioned in the sources, between AI and blockchain and gaming. How does that fit in?
Yeah, that's a fascinating angle. The macro trend seems to be heading towards game worlds that are not only tokenized, giving assets real-world value persistence,
Right, the own part.
but also dynamically generated or enhanced by AI. Imagine game environments, quests, even unique NPC characters or items created on the fly by generative AI. And then, critically, the ownership, rarity, and history, the provenance of those AI-generated assets, could be instantly secured and verified on the blockchain.
So AI creates the dynamic content, and blockchain guarantees its uniqueness and ownership.
Exactly. It allows for potentially massive, personalized, persistent game worlds with complex, maybe even self-regulating economic ecosystems. AI provides the scale and novelty. Blockchain provides the scarcity and trust. It's a powerful combination.
It's easy to see how that whole picture would reignite investor interest, especially in specific gaming tokens.
And it has. Since mid-2024, the sources note renewed interest, not just in infrastructure plays like IMX, but also in some of the veteran gaming tokens.
Like which ones?
They specifically mention AXS, the token for Axie Infinity, despite its past issues.
Interesting that it's seeing a comeback.
And JLA from Gal Games, seeing capital rotate back into these names alongside the newer projects suggests a broader sector-wide belief that maybe the worst of the tokenomic mess is behind us, and more viable, sustainable models are finally emerging.
Okay, so if we pull all this together, the investment, the big players sticking around, the tech convergence, the token interest, what's the big takeaway?
I think the key insight, repeated across the sources, is that Web3 gaming is being seriously positioned as potentially one of the most powerful retail adoption narratives for the next bull cycle.
More powerful than DeFi even.
Potentially for retail adoption, yes. Because games are fun, they're familiar, they're engaging. DeFi can be complex, intimidating. If the next 100 million crypto users aren't going to learn about yield farming, maybe they will adopt crypto if it means truly owning their awesome sword in their favorite RPG.
Makes sense. But we have to temper the enthusiasm, right?
Yeah.
We need to talk about the lessons learned, the cautionary tales.
Absolutely crucial. We cannot just hype the resurgence without acknowledging the failures. Sustainability has to be the absolute focus now, which is why understanding the P&O model's differences is so important. And the prime cautionary tale, the one everyone points to, is Axie Infinity.
Their rise was meteoric, but the crash was brutal.
Textbook example of unsustainable P2E. We need to be really specific about why it failed, though, to see if the new models avoid those traps.
Okay, what was the core flaw in Axie's model?
It revolved around their two tokens, AXS for governance and SLP, Smooth Love Potion, which was the main reward token earned through playing. The fatal flaw was that SLP had an effectively unlimited supply. You earned it constantly by playing.
Okay.
But the primary way to spend SLP, its main sink, was breeding new Axie creatures. And the cost of breeding just wasn't high enough or didn't scale properly to absorb the massive amount of SLP being generated as the player base exploded.
So more SLP being created than being destroyed.
Massively more. Compounded by the fact that eventually the cost to start playing buying the 3 axes you needed became incredibly expensive, pricing out new players.
So the inflow of new money required to buy up the SLP from existing players dried up.
Exactly. New player growth stalled. SLP holders had little reason to hold it other than selling. The price collapsed. The rewards became worthless. Players left. A classic hyperinflationary death spiral.
Ouch.
That crash forced every serious Web3 game developer today to obsess over token sinks. Are they strong enough? Are they intrinsically linked to core gameplay loops people want to engage with, not just forced chores? It fundamentally reshaped design philosophy.
It really is the ghosts haunting the sector.
Yeah.
But it also makes the pivots from other companies more interesting, like Gala Games.
Right. Gala is an interesting case study. They face their own challenges, but the sources highlight their strategic decision to broaden their focus beyond just gaming.
Into what?
Into broader entertainment. They started Gala Film, Gala Music, proving, or attempting to prove, that the underlying blockchain infrastructure, tokenized ownership, decentralized distribution could work for movies and music too. It shows ambition beyond just fixing game tokenomics. It's about a cross-media Web3 ecosystem.
A bigger vision.
A bigger vision, yeah. And then you have Square Enix. They represent the committed legacy giant.
Despite that initial backlash they got for their NFT experiments.
Yes, that's what's fascinating. According to the sources, they faced significant fan criticism. But instead of retreating, they reportedly doubled down on Web3 partnerships in 2024.
Why? What does it tell us?
It signals a deep strategic conviction. They seem to believe that even if their first attempts were clumsy or unpopular, the fundamental idea of digital ownership, verifiable scarcity, and player-run economies is too powerful to ignore long-term. Their persistence as a major IP holder really lends weight to the idea that this isn't just going away. They're willing to weather the storm.
Okay, so for listeners who want to track this resurgence themselves, beyond just reading headlines, the sources mentions some specific metrics to watch.
Yes, absolutely. Forget just watching the token prices day to day, which can be misleading hype. Look at the fundamentals.
Like what?
First, track the overall GameFi market cap trend. The sources estimate it's currently around, say, $10 to $12 billion. Compare that to the speculative peak in 2021, which was maybe $30 to $40 billion.
So still well below the all-time high. Suggests room to grow if it's real this time.
Exactly. Significant potential upside if the utility model pans out, but it's not wildly inflated yet. Second, and maybe most important, track active Web3 gamers.
Meaning people actually playing, not just holding tokens.
Yes. Daily active wallets interacting with game contracts. You can find this data on platforms like DappRadar or Nansen. An upward trend in active players is the single best indicator of genuine adoption and sector health, far more than market cap alone.
Okay, and third.
NFT trading volumes. Specifically, look at the volume on marketplaces focused on gaming NFTs, especially those built on Immutable X if you're tracking their ecosystem directly. Healthy trading volume indicates liquid markets and player engagement with the own aspect. Those 3 market cap context, active users, and trading volume give you a much clearer picture than price charts alone.
All right, we've covered the tech, the economics, the shift in thinking, the market context, but let's get back to the immediate buzz, the speculation, this central mystery. Which specific gaming giants are supposedly in these late-stage talks with Immutable?
Right, that's the million-dollar question driving a lot of the current excitement. The sources are careful, obviously, not to name names definitively. These kinds of deals involve NDAs until they're ready for official announcement.
Sure.
But the speculation is rampant, and it centers on the usual suspects, the biggest players with global reach and a history of experimenting with new models.
Like who? Who's on the consensus list?
Well, you hear names like Electronic Arts, EA, massive portfolio FIFA, or EA Sports FC now, Apex Legends, Battlefield. They certainly have the scale and the type of live service games that could fit.
Okay.
Who else? Activision Blizzard, now part of Microsoft. Think Call of Duty, World of Warcraft, Diablo. Again, enormous IPs, huge player bases, existing in-game economies. They'd be a monumental partner.
Makes sense. Any others?
Maybe further, deeper partnerships with companies already involved, like Ubisoft. They've shown they're willing to experiment. Perhaps they're ready for a bigger commitment using Immutable's newer tech. It's all speculation, but those are the kinds of names being whispered about.
And if just one of those names were to make an official announcement, say confirming a major game integration or token launch on Immutable.
It would be seismic for the sector. Instant validation in the eyes of millions of mainstream gamers, and likely the mainstream media too. The exposure would be unlike anything GameFi has seen before. It could really open the floodgates.
And for investors, or just people watching this space closely, what's the immediate signal to look for when or if such an announcement drops?
The sources are pretty clear on this. Watch the IMX token performance immediately following any official confirmation,
Why IMX specifically?
because it's positioned as the direct infrastructure bet. The theory is that big institutional money, which might have been hesitant about GameFi before, will see a major partnership as the green light. They'll want exposure, and IMX is the most direct way to get it if Immutable is the chosen platform.
So a significant move in IMX post-announcement would signal that serious capital believes the narrative.
Precisely. It would serve as immediate market confirmation that the institutional players are rotating into GameFi, believing that the retail adoption story, powered by major studios, is actually starting to happen. It becomes a key barometer.
Okay, so pulling it all together then, the overarching importance of this whole trend, this potential resurgence, it really circles back to that core idea we discussed earlier.
Yeah, that Web3 gaming isn't just some small niche within crypto anymore. It's being identified quite consistently in the material as one of the most powerful retail adoption narratives for the next bull cycle.
Because it's accessible, it's fun, people get gaming.
Exactly. And when it's done right, with true ownership via P&O, it offers something tangible, something empowering that traditional games just technically cannot match, that feeling of really owning your digital stuff.
So that leaves us, and you the listener, with the big question to chew on as this all plays out. Is this real? Is Immutable's sophisticated tech-first P&O approach going to finally trigger a sustainable GameFi revival, one that actually learned from the P2E disaster?
Or is it just hype 2.0? Are we maybe setting ourselves up for another round of inflated expectations and poorly designed tokenomics, just with fancier tech this time?
The infrastructure certainly seems much more robust now. The thinking seems more mature.
It does. The foundations look stronger. But the execution by the game studios themselves will be absolutely critical. They have to nail the game design and the economic design to finally silence the critics and prove sustainability.
The stakes feel incredibly high this time
They
around.
really do. And, this raises a broader, maybe more profound question for the whole crypto space, building on that retail adoption point.
Okay.
Well, think about the last few market cycles, what really drove them. Mostly financial innovation, right? DeFi summer, stablecoins, lending, borrowing, staking rewards. It was largely finance-centric.
True. Very complex for newcomers.
Very. But now look at the breakthroughs we've been discussing. Layer 2s that actually scale, gasless transactions becoming feasible, wallets getting way simpler, and potentially major beloved game IPs getting involved. Should we start considering that the next major crypto cycle, the one that brings in the next wave of hundreds of millions of users, might be driven less by complex DeFi instruments and more by the tangible utility and mass appeal of things like gaming and entertainment? GameFi over DeFi as the primary engine.
That's a big thought. Crypto adoption driven by fun instead of finance.
The infrastructure is arguably reaching a point where that's becoming plausible. If so, it would fundamentally change the complexion of the market, the types of projects that succeed, and where the next big wave of capital and users comes from. It shifts the focus from speculation towards genuine digital interaction and ownership within virtual worlds.
A fascinating possibility. The future of crypto might end up looking a lot more like the metaverse than Wall Street. A provocative thought indeed to wrap up on.
Definitely something to keep an eye on.
Well, that's all the time we have for this deep dive. If you found this breakdown of Immutable's strategy, the P&O shift, and what might be coming next for major gaming useful, if you appreciate us digging through the sources to connect these dots.
We genuinely appreciate your support.
Yeah, seriously, it makes a huge difference. If you could take just a second to subscribe, maybe leave a comment with your thoughts, or just hit the like button. It really helps tell the algorithms that this content is valuable.
It boosts visibility, helps the channel grow.
And frankly, it lets us keep putting in the hours needed to research and produce this kind of in-depth analysis, trying to cut through all the noise and hype for you.
So you don't have to spend your time sifting through it all.
Exactly. So thank you for tuning in, thank you for your support, and we'll catch you on the next deep dive.